Hey, what's up, everybody? Welcome to the Crypto Sandwich channel, where we talk about all things crypto, and I'm a ham sandwich. As always, we'll be covering crypto news and technical analysis, and we'll also take a look at traditional markets that affect the crypto space. A free way to support the channel is by liking the video, commenting down below, and subscribing to the channel. Today is Wednesday, March 9th, 2022. The stage is set. Let's get into it. Welcome to episode 3. Never a dull day lately as financial markets continue to experience record volatility, with commodities spiking to historic levels. The turmoil in equities has also worsened, with major stock indices tumbling further, as the war between Russia and Ukraine wages on. Tense conditions globally have sent precious metals on a rampage, with the safe haven asset gold revisiting $2,070 an ounce. Meanwhile, cryptocurrencies remain risky but have since surged due to Bitcoin and other coins being used to bypass economic sanctions. With all that said, let's get into some tabs and see what's been going on in this week or so in crypto. First up, top buyers may have already capitulated, while strong hands keep stacking, with top buyers largely flushed out of the network and evidence it is a hodler-dominated market. Let's take a look at illiquid supply, which tracks the volume of coins held in wallets with little or no history of spending. These often represent cold storage in the wallets of hodlers who withdraw religiously whilst undertaking a dollar-cost average style strategy. Illiquid supply has now surpassed the May 2021 peak, reaching 76.3%. This has now returned to the same level as the 2017 market top, reversing a 4-year-long increase in coin wallet liquidity. Note, however, that both of these instances preceded major sell-off events, and thus it remains to be seen if these coins are truly in cold storage. Not saying to follow the money here, but the beauty of on-chain analytics is we can get an insight into bigger players' strategies and motivations, data that's typically not available or transparent in other markets. Next up, Bitcoin balances on exchanges hover around an all-time low first hit in April 2021, with current exchange balances at 2.565 million BTC, down from the March 2020 all-time high of 3.141 million BTC. What's interesting is we can see on Binance, Bitfinex, Bittrex, and FTX that Bitcoin balances are actually increasing, while on the rest of the exchanges, it has been on a steady decline since May 2020. But in the aggregate, a relative equilibrium has been established since September 2021. Low liquidity of Bitcoin on exchanges can be seen as bearish as it takes less money to move the markets and cause price volatility. While on the bullish side of the coin, investors have strong hands and are keeping their coins off exchanges, most likely in cold storage hardware wallets. Next up, the BitMEX saga comes to an end years after authorities first came for the founders of the cryptocurrency derivatives exchange. The BitMEX founders, the outspoken Arthur Hayes and Benjamin Dello, have pleaded guilty to Bank Secrecy Act violations. In 2020, the DOJ and CFTC accused the founders of deliberately slacking on their regulatory legwork and failing to implement KYC and AML processes. The authorities say the execs willingly hid the identity of those that were using the platform to launder cash, using their location as a way to avoid regulatory scrutiny. Each founder will pay $10 million in damages, added to the $100 million settlement that BitMEX came to with regulators last year. The exchange itself has come out relatively unscathed though, currently boasting a 1.48 billion 24-hour trading volume. That's over half of Coinbase's $3.77 billion trading volume. Moving on. Next up in traditional markets, commodity prices spiked to historical levels. Oil prices soared to 11-year highs, with Brent crude gaining around 25% early week to hit a high of $119 per barrel, and WTI crude oil gaining 27% to a high of $115. Agricultural commodity prices also surged higher, with wheat prices surging past its 15-year high to $13.40, up 60% in the last 30 days alone, as Russia and Ukraine together commands about 30% of global wheat supply. Tying into the previous article, this one says, gold and oil push higher while crypto and stocks continue to tumble. Oil has pushed to its highest price since 2008 as US and European allies look to ban Russian imports. Bitcoin's correlation with safe havens early last week was fleeting, with Bitcoin dropping off some 21.4% year to date, while gold has posted a gain of 11% in the same time. While physical gold is nearing all-time highs, the market seems to have decided that crypto's so-called digital gold, Bitcoin, is more of a risk-on asset than a safe haven. Similar to many traditional stocks, Bitcoin in the broader crypto market has taken a beating over the last few weeks. Next up, in world monetary news, we seem to be on the cusp of what some are calling Bretton Woods 3.0, as monetary policies and sanctions are changing the way people and countries interact with the current financial system. Whether it be news that Coinbase blocks 25,000 accounts linked to Russia to support sanctions, OpenSea updates banned countries list sparking decentralization debate, PayPal joins other payment and remittance providers suspending services in Russia, Visa and MasterCard suspend operations in Russia as part of sanctions over Ukraine. While not every exchange is quick to sanction, Kraken CEO has a spicy take on the topic, noting on Twitter, "We cannot freeze the accounts of our Russian clients without a legal requirement to do so. If we're going to voluntarily freeze financial accounts of residents of countries unjustly attacking and provoking violence, step one would be to freeze all U.S. accounts." This is leading Russia to turn to alternatives as Russia returns to the gold standard, amidst its Ukrainian invasion and resulting sanctions, has returned to a gold standard by backing the ruble with gold. The ruble has seen a dramatic decline, losing about 67% of its value since they invaded Ukraine. And also as an alternative, Russian banks are planning to switch to China's card payment system after MasterCard and Visa halted operations, reports say. All of this news is prompting renowned investors like Jim Rogers, seeing the end of the US dollar, says Washington does not play fair anymore. The veteran investor added, "An international currency is supposed to be neutral, but in Washington they are now changing the rules. So many countries are starting to look for a competitor, China or Russia or India, Iran, Brazil. Some countries are starting to look for a competing currency." And other financial insiders like Zoltan Pozsar, Credit Suisse strategist, says, "We're witnessing the birth of a new world monetary order. Money will never be the same again after the Ukraine war," writes Zoltan Pozsar, "and Bitcoin may be a beneficiary." Pozsar has written, "The U.S. in a commodity crisis that has given rise to a new world monetary order that will ultimately weaken the current dollar-based system and lead to higher inflation in the West. This crisis is not like anything we have seen since President Richard Nixon took the US dollar off gold in 1971. As the initial Bretton Woods era, 1944 to 1971, was backed by gold, and Bretton Woods II, 1971 to present, backed by inside money, essentially US government paper, said Pozsar, Bretton Woods III will be backed by outside money, gold, and other commodities. What occurred surely isn't lost on China, and Pozsar sees the People's Bank of China faced with two alternatives to protect its interests. Either sell treasury bonds to buy Russian commodities, or do its own quantitative easing, i.e. print renminbi, to buy Russian commodities. Pozsar expects both scenarios mean higher yields and higher inflation in the West. These are tumultuous times, and it seems we're going through a financial changing of the guard. And while some note risk asset bottoms during past evasion events, during historical invasion events, risk assets, stocks, bottomed just before the invasion 5 out of 5 times. The chart below, data courtesy of Fundstrat, shows equity markets 6 months prior, 2 months prior shaded in gray, and 18 months after invasion events. But it's in times like this that the advice to invest in real assets, real skills, and real friends never rang so true. Moving on. Next up, in adoption news, eBay CEO says firm is deeply considering adding crypto payments, announcement expected in March. eBay started allowing the sale of NFTs in May of 2021, becoming the first e-commerce company to tap into the NFT frenzy. A company representative had also stated at the time that the company was exploring allowing cryptocurrencies. With cryptocurrency adoption growing at a breathtaking rate, demand for crypto payments has been soaring, compelling businesses to roll out crypto payment options. Companies such as AMC Entertainment and Tesla are already accepting crypto payments. Although willing, many e-commerce websites are hesitant to roll out crypto payments due to the wild volatility associated with price and environmental concerns. Bullish. Let's move on. Freelance workers in Argentina among most active in Latin America receiving part of paycheck in crypto. A recent report states that freelancing is experiencing a boom in Argentina, and also comments on how Argentinians are among workers in the region that most actively use cryptocurrencies to receive part of their paycheck. A report titled State of Global Hiring 2021, made by Deal, a global hiring firm, has discovered that Argentinians and Latin America in general are increasingly focusing on international companies and jobs. The report explains this is likely a result of the decline of local economies and jobs due to the effects of the pandemic over the last 2 years. One positive note after all the happenings over the last 2 years is that a lot more companies have either switched over to remote work environments or are more open to hiring employees who work remotely. Good to hear. Let's move on. Reported first real estate purchase made with Bitcoin in Chile. Yuval Ben-Haim, regional manager of RE/MAX, a real estate firm that operates worldwide, has announced that the first real estate purchase with cryptocurrencies has already occurred in Chile. The purchase that was made using Bitcoin happened last year. Such purchases have also already happened in other countries like Colombia, Mexico, and Venezuela. Chile is just one of the Latin American countries that has debuted Bitcoin as a payment option available for properties and land. Prior to this report, several purchases of the same kind have been made in countries of the region. The first purchase was reported in Venezuela in August when an apartment was purchased with $12,000 worth of USDT. Bullish adoption news. I think stories like this are going to keep happening and become commonplace as the benefits of cryptocurrencies Trojan horse their way into our everyday lives. Moving on. Next up, the United States claims Bitcoin mining crown following China crackdown. China's share has effectively dropped to zero according to the Cambridge Center for Alternative Finance. The latest CCAF data shows the US accounting for 35.4% of the global hash rate, the world's total computational power used to mine Bitcoin. Kazakhstan and Russia followed the US with shares of 18.1% and 11% respectively. China's share has effectively dropped to zero according to the CCAF following the government-mandated ban on crypto mining in the country. China's dominance of the Bitcoin mining industry peaked at over 75% in September 2019. The immediate trend suggests there will be no one clear winner. This is good news for decentralization. A healthy distribution of miners controlling hash rate means that a 51% attack or a double spend is less likely on the network. If we take a look at the chart of the total hash rate, we can see that the Bitcoin hash rate is down almost 12%, sitting at 195.2 million terahashes per second, after making an all-time high of 214.5 million terahashes per second on February 18th. The Bitcoin hash rate still appears to be in a bullish channel that started on July of last year when the hash rate was down to 84.8 million terahashes per second. Bullish fundamentals. Moving on. Ethereum's lowering gas fee could be a dangerous indicator for its price. Here's why. Throughout the previous year, Ethereum's rising gas fee was among the biggest concerns of the cryptocurrency industry, especially due to Ethereum's major role in DeFi and NFTs. The rising gas fees had inadvertently led to more congestion, hence higher transaction time and costs. In fact, Ethereum's average network fee has gone down by almost 80% from its recent high on January 10th. At the time of writing, an average Ethereum transaction cost 0.0046 ETH or $12.14, down from around $52 in early January. Ethereum's median gas fee has also slid by over 84% since early January, even though the levels remain much higher than this time last year. A steep drop in gas used was recently noted on February 15th, which has since recovered, but it could provide an explanation for the fall in gas price While a decline in gas used could itself be due to lower transaction costs, it could also be due to a fall in transactions themselves. The average transaction count on Ethereum has been on a decline since late November. One reason for this could be the continued decline in DeFi usage. The total value locked in DeFi smart contracts has gone down to $68.9 billion from $98.4 billion 3 months back. Much of this has been due to larger macro factors and the price decline most cryptocurrencies have experienced lately. However, another factor that could be pushing down Ethereum's gas usage and the fee is the rise of alternative blockchains. While a token swap on Ethereum costs $8.75, the L2 Zero Knowledge charged 22 cents for the same transaction. So lots of speculation about what could happen, but one thing is for sure, Ethereum needs to sort out its network fees if they're going to be used as the underlying technology for DeFi, NFTs, blockchain-based video games, smart contracts, and everything else decentralized ledger technology has to offer. The race is on and the competition is stiff. Take a quick look at this chart to see just how many competitors there are in this race. Here we got Matic, Cardano, Binance Coin, Avalanche, Elrond, Solana, Terra, Phantom, Polkadot, and Algorand. With all these layer 1 smart chains competing against Ethereum, how would you pick a winner? Let me know your thoughts in the comments below. Either way, time will tell. Next up, the UK government wants more power to seize crypto assets. Of course they do. Could we be in the last stage of Gandhi's adoption cycle before acceptance? You tell me in the comments below. Moving on. China's share in Bitcoin transactions declined 80% post-crackdown. The People's Bank of China, the central bank of the country, claimed in a recent note that China's share in the global Bitcoin transactions has dropped rapidly from over 90% to 10%. The country's first ban came in 2013 when it prohibited banks from handling Bitcoin transactions. This was followed by a ban on local cryptocurrency exchanges in 2017, forcing them to shut their operations completely. The country later ramped up its crypto crackdown efforts in 2021 when it carried out multiple regulatory operations to eradicate Bitcoin mining from the country, and by September 2021, it had deemed all crypto transactions illegal. Not great news for Chinese citizens, but China is one of the few countries that has continually flipped and flopped on their regulatory crypto stance. I wonder how much of this loss of market participants is affecting the current state of Bitcoin and cryptocurrency price action. Time will tell. Next up, Morgan Stanley owns at least $458 million worth of Grayscale Bitcoin Trust shares, according to filings. This is bullish for the ongoing supply shock. Moving on. Citadel plans to start making markets in crypto in the coming months. Citadel CEO Ken Griffin, a Bitcoin skeptic, admits he has not been right on this crypto call. He now says, "It's fair to assume that over the months to come, you will see us engage in making markets in cryptocurrencies." The billionaire executive has long been a Bitcoin skeptic. He previously described the rush to embrace cryptocurrencies as a jihadist call against the US dollar. In 2017, he told CNBC that Bitcoin has many of the elements of the tulip bulb mania. He also said, "I get very worried that people that are buying Bitcoins don't really understand what they're participating in." Griffin also admitted Thursday that crypto has been one of the great stories in finance over the course of the last 15 years. And I'll be clear, I've been in the naysayer camp over that period of time. Bullish news. Another crypto hater domino falls under the tide of adoption. Moving on. The Swiss city of Lugano to make Bitcoin and Tether de facto legal tender. The municipality wants businesses to accept crypto in everyday transactions. Aiming to become Europe's Bitcoin capital, Lugano, Switzerland has formed a partnership with stablecoin issuer Tether to establish Bitcoin, Tether, and Lugano's own LVGA points token as essentially legal tender in the city. A number of other Swiss localities that for some time have been accepting crypto for tax payments is aiming to have all of its businesses seamlessly use crypto for everyday transactions. The move was described as a de facto legalization, as the Swiss franc will surely remain the actual legal tender in Lugano and elsewhere in Switzerland. Bullish adoption news. If you're so inclined to actually part with any of your precious Satoshis, you can easily do so by transacting with the Swiss. Next up, Thailand reportedly exempts 7% crypto tax for traders on authorized exchanges. The revised tax policy exempts crypto traders from the mandatory 7% VAT or value-added tax on authorized exchanges while offering tax exemptions of up to 10 years for crypto startup investors. The finance minister said that the revised tax policies had been developed to promote the nascent digital asset market in Southeast Asia's second largest economy. Thailand has grown to become one of the leading crypto destinations in Asia. The new tax policies could also become a benchmark for other nations currently looking to impose some form of crypto taxation. Indian crypto traders have been demanding something similar after the Indian government announced a 30% tax on crypto holdings, without accounting for the losses incurred by traders. This is reasonable news, not as good as in Portugal where cryptocurrency transactions are exempt from value-added taxes, as the country views cryptocurrencies as a form of payment rather than an asset. But it's way better than the 30% in India. Next up, Binance Capital Ventures sets up a $500 million fund for crypto projects. Venture capital investments in crypto projects topped $25 billion in 2021, more than the sum of the last 10 years. Binance Capital Ventures, one of the largest startup investment firms with $5.1 billion in assets under management, has announced the formation of a new $560 million fund that will focus on crypto-related investments. The fund closed in November and has already invested $100 million in 12 undisclosed projects. Binance Capital Ventures has a history of investing in the crypto and blockchain sector, having previously backed companies such as BlockFi, Compound, and Digital Currency Group. The most recent fund, BCVI, is the first of its kind from Binance Capital Ventures, focusing solely on the crypto market. More bullish adoption news. Let's move on. Adobe's Behance adds support for Solana NFTs. This integration is available for Behance creators with Phantom wallets, and the feature was powered by QuickNode. This is more great adoption news, and NFTs being showcased by their creators on the platform in which they were created will no doubt clear up any of the authenticity disputes that are easy to encounter currently in the NFT space. Maybe this integration will help the company's struggling stock price, which is down a staggering 40% from its all-time high in November of 2021. No doubt leaving investors feeling as depressed as users of the products, as many creators complain that the products continue years of decline as the company puts their attention anywhere but the user experience. Next up, I thought I'd show this article just because of the crazy artwork that has absolutely no tie-in to the accompanying article. I'm a huge fan of Twin Peaks, but this choice of art and story pairing left me more confused than Season 3 of the 90s murder mystery TV series. Moving on. Google Trends data reveals that no one cares about the metaverse or NFTs in 2022. Search interest for keywords metaverse and NFT has continued to drop since the start of the year. Last year there was a lot of hype around the buzzwords NFT and metaverse. It seems only natural that it subside, especially with all the other crazy things going on in the world. But at the same time, you'd think the real world news would drive escapism into the matrix. Moving on. Customer demand prompts Charles Schwab file for crypto economy ETF. Schwab's crypto ETF would buy into stocks on its crypto economy index to give investors indirect access to digital assets by investing in businesses that deal with crypto. A full 16% of Schwab's clients plan to put money into cryptocurrencies in the first half of the year. More bullish adoption news. Moving on. U.S. lawmakers working on policy to open crypto markets to institutional investors, says Kevin O'Leary. Mr. Wonderful has revealed that a group of U.S. lawmakers is working on a policy to open crypto markets to institutional investors. The good news is they are all over it and agree there is tremendous opportunity once they pass policy. O'Leary has been saying repeatedly that many institutional investors are waiting to be able to invest in Bitcoin and other cryptocurrencies. In February, he said he expects the price of Bitcoin to appreciate dramatically in 2 to 3 years when institutions can finally buy it. Bullish news. This news comes on the heels of news of the White House expecting to release an executive order in the coming days regarding cryptocurrency. Nothing says democracy like an executive order. Hey everyone, hope you're enjoying the content so far. I'd like to take a quick minute to share a couple ways you can help the channel by using the affiliate links for some products that I use and recommend. First up is Ledger, popular for their Nano line of hardware wallets. Hardware wallets are a necessity for crypto protection. If you do not control your private keys, you do not own your crypto assets. Next up is Trezor, popular for their Trezor 1 and Model T hardware wallets. Manage your entire digital identity, coins, keys, or passwords, all on one device, owned and controlled by you. If you're in the market for a hardware wallet, please consider using an affiliate link on screen or down in the video description below. Remember, not your keys, not your coins. Thanks for supporting the channel. Let's get back to it. Looking at Coin360, pretty much the entire market is in green as Bitcoin alone is up over 8% in the last 24 hours. The Fear and Greed Index is sitting at 22 in extreme fear, down 30 from its neutral reading of 52 last week. I'm not sure why the reading is in extreme fear after the bullish pump we've had over the last 24 hours. I've actually never noticed such divergence in this indicator compared to price action, so let's keep a close eye on the market for any shenanigans. Until then, let's dive into some charts for a closer look at some price action. Taking a look at the Bitcoin dominance chart. Bitcoin dominance continues its bullish breakout out of this descending triangle to where it currently sits at 44%. We could see some resistance from the 46% area as there is some historic action around this level. If dominance continues up after that, there is significant resistance at all the major round percentages above, with 52% probably being a major battle area. But again, if we reject down from here, I think we can see dominance fall to support at the top of the descending triangle, and if heaven forbid, we could fall back into it. Now let's get into the Bitcoin chart. Looking at Bitcoin on the weekly chart, we can see since last week a roller coaster of price action as price rejected at the $45,400 level and found support at the bottom of the giant ascending triangle, exactly as predicted. Just as things were looking bleak, Bitcoin jumped 10% to where it currently sits at $42,200. There is some speculation that Janet Yellen leaked some info about Biden's upcoming executive order regarding crypto regulation in the United States, which was apparently favorable for the industry. But who knows if that's what caused the price increase. If price action stays in the ascending triangle, the next level of resistance to break would be the $47,000 area. And from there, I could see us fighting with the middle of the triangle around $53,000. But that's a long way off from where we currently are. Until then, we'll just have to wait and see, and as always, play it level by level. Now, let's take a look at the most famous shift coin out there, gold. Gold has been trading in a $160 price range for just over 90 days from about $1,740 to $1,900. This is after making an all-time high in June of 2020 of just over $2,070. It then dropped to make a low of $1,675. After taking a pause at $1,900, exactly at the previous all-time high from August of 2011. Until recently, gold was consolidating in a symmetrical triangle starting around June of 2020. Gold has spiked up over 16% since the beginning of January, breaking out of the triangle but rejecting off of its previous all-time high of $2,070. Since then, it has dropped $100 or 4% to where it currently sits at $1,988. Zooming out, we could be looking at a giant cup and handle pattern over 9 years in the making, with a breakout target of over just $3,200. That would be some long overdue price action for the suppressed precious metal. If price breaks down, I think we could see some support at the $1,940 area at the top of the previous 90-day trading range, or around the $1,880 level at the top of the symmetrical triangle. That's it for the gold chart this week. And you know Peter Schiff is out there smiling somewhere.
I love gold!
I know you do, buddy. Moving on. And just before we wrap up, I'd like to share 2 quotes with you. First is from the great Max Kaiser. The secret is to get rich slow, but nobody has the time to wait 20 years. Patience is the key to success, And as in most things, it's about consistency, not intensity. I think this ties in nicely to the next quote. Trading is going to be around forever. Improve your analytical skills first. The money will be a byproduct of great analysis, and that's a skill set that you'll have for life. These quotes embody the spirit of this channel, which is to improve our financial literacy and understanding of markets that are made to be difficult to understand by design. But together, hopefully we can make sense of it all and navigate these troubling waters. That's it for this episode of Crypto Sandwich. Thanks for watching or listening. A special thanks to all the subscribers of the channel. If it wasn't for you, I'd just be talking to myself. Let me know in the comments below if you'd like to see me cover something I didn't. And don't forget to like and subscribe, as it's a free way to help the channel. Until next time, I hope you have a great time. Keep your head up and keep your bread up. Disclaimer. The Crypto Sandwich channel is for entertainment and information purposes only. Nothing on this channel is financial advice, nor is it meant to be a recommendation to buy or sell any financial instrument. I'm not a financial advisor, I'm a sandwich. If you take financial advice from a ham sandwich, you're out of your bread box. Always do your own research.